The last time interest rates rose, millions of people paid more for their mortgage, lost their jobs, watched businesses close. The decision that caused all of that came down to a single number: 2%. Where did it come from? Nobody ever told you. Every major central bank on earth has the same target: 2% inflation. The US Federal Reserve targets it, the European Central Bank targets it, the Bank of England is legally required to write a formal letter to the Chancellor if inflation moves more than 1 percentage point above or below it. The Bank of Japan targets it, Bank of Canada, Reserve Bank of Australia. This number governs whether your mortgage rate rises or falls. And almost nobody knows where it came from. Where did it come from? A television interview in New Zealand in 1988, on the 1st of April. Roger Douglas went on television without a script for this moment. When asked about inflation goals, he said his government wanted inflation of around 0 to 1%. He said it the way you might estimate a journey time, something between there and there. He had not commissioned an economic study, he had not set a target, he had said a number. Don Brash became governor of the Reserve Bank of New Zealand 2 months later. He and his team were now responsible for delivering a target that had been stated publicly before they could weigh in. They went to the literature on inflation measurement and found that official inflation figures tend to overstate true inflation by roughly 1 percentage point, a known statistical bias. So they added that 1% to Douglas's upper limit. 0 to 1% became 0 to 2%. Michael Riddell, who headed the Reserve Bank's monetary policy unit at the time, later described the process. It wasn't ruthlessly scientific. He also said it was settled more by osmosis than by ministerial sign-off. New Zealand passed its Reserve Bank Act in 1989. Canada adopted inflation targeting next and also chose 2%. Then the Bank of England in 1992, Sweden in 1994, the European Central Bank in 1998. Few of these central banks derived the number from first principles. There was no international study that concluded 2% was the correct anchor. The United States Federal Reserve informally used 2% from around 1996. Ben Bernanke made it an explicit, publicly stated commitment in January 2012. That is 24 years after Roger Douglas said a number on New Zealand television. For nearly a quarter of a century, the world's most powerful central bank was anchored to a number chosen in a TV interview it had no part in. There is a concept in institutional sociology called isomorphism, the tendency of institutions to copy each other's structures, not because those structures are proven optimal, but because they are familiar and because nobody wants to be the organisation that chose something different and got it wrong. 2% spread because New Zealand adopted it and did not immediately collapse. In 2022, inflation in the United Kingdom reached 11%, the highest in 40 years, driven by energy prices and supply chains broken by a pandemic. The Bank of England had one mandate: return inflation to 2%, not to 3, not to 4, to 2, the number chosen 34 years earlier by adding 1 percentage point to a finance minister's television remark. The Bank of England raised interest rates 14 consecutive times, from 0.1% in December 2021 to 5.25% in August 2023. In 14 months, the policy rate rose more than 50-fold, not because of decisions homeowners made, because a central bank was legally required to return to a number set by a measurement bias rounding calculation in 1988. The Federal Reserve raised rates 11 times in 16 months. The European Central Bank raised rates 10 times consecutively, the first time in its history it had ever done so. Different economies, different conditions, same target, same response. Olivier Blanchard, the IMF's former chief economist, argued in 2010 that the target should be 4%. A higher target would leave more room to cut rates before hitting 0. The logic was clear. The evidence from 2008 backed it up. The recommendation was almost entirely ignored, but changing the target would require something central banks cannot afford. It would require them to stand up and say, the number we have defended for decades, The number that shapes borrowing costs, hiring decisions, and economic stability was never proven right. It was chosen informally, it spread by imitation, and we kept it because the cost of admitting the origin was higher than the cost of keeping the number. This is what makes 2% the most consequential number in economics, not because it is correct, but because it cannot be questioned without the questioner destroying their own authority. A number chosen in a TV interview, passed around by imitation, and now too embedded to touch. Not because the evidence demands it, but because no institution can afford to admit the origin. If you want to understand the systems that shape economic life before they shape yours, subscribe. Up next,